Julian, thanks so much for joining.
Hey, Eric. Hey, Brian.
Do you want to just quickly introduce yourself and Schematic and a little bit of your background in the industry?
Sure. My name is Julian Counihan. I'm a partner at Schematic Ventures, which is a supply chain focused venture capital fund based here in San Francisco. We've been around for 3 years, 15 companies in the portfolio. All are doing really well. We've got 5 that have raised over $50 million. So we're a very early stage fund, invest sometimes in a team and an idea, sometimes half a team and an idea. So we're really the first institutional capital. I started out in supply chain. I come from a supply chain family. I was a software developer working on warehouse automation systems about 15 years ago, pre-robots, pre-Kiva, and have been investing into this space for about 6 years now.
Cool. And do you want to name some of the companies that you're working
Sure.
with? Yep.
So some of the companies in the portfolio, so the first investment we made 3.5 years ago was Plus One Robotics. So it's an each picking articulation arm for warehouses. On the board of that company, they have the largest install base of robot arms in e-commerce warehouses across the country. Investor in Platform Science, which is an ELD for commercial trucks. Investor in Outrider, just came out of stealth. We were in the seed round 2 years ago with NEA. Flock Freight, which just announced their 50 million Series B. We invested a couple years ago in the seed round. And then on the earlier side, some of the participants today, we're very lucky to lead RPA Labs pre-seed with Matt Motzik and Suraj Menon. They're kind of legends in the sort of freight technology space. And the most recent, so brand new, we invested into Abteen Hamidi's short haul drayage platform in Chicago.
Cool. And that's Torch, right?
Yep, that's Torch. Oh, and Leaf Logistics.
Yep.
Anshu's company. Anshu just announced his Series A, 20 million. We invested in that company 2 years ago.
Yep. So we've had a couple of those people already on today, and so you've had a couple good weeks.
Yeah, yeah. It's been a great year for the portfolio.
Cool. Excellent. Well, congrats on that. Let's talk what the current scene in investing is. We've talked at a number of different JOC events. And I feel like this is always the first question I ask because this is the first question I get asked a lot is like, where are we, how has the VC kind of view of logistics changed over time? And obviously now we have a whole bunch of internal headwinds that are affecting global economies that are going to rebound really heavily on logistics. Has that changed the picture in terms of what's being invested into from an early stage startup perspective?
Absolutely. There was a big shift in the past couple of months. I think SoftBank's repricing of a lot of the late stage companies was the tip of the spear.
Yeah.
And VCs, especially at the later stages, have started to take a different look toward the quality of the revenue and the type and format of the revenue.
Yep.
So in supply chain, that means that the digital intermediaries or digital brokers that were raising at software multiples on their gross revenue are now having a tough time with the same fundraising story, given net revenue take rates of 10, 20%.
So is some of that sort of money that was enamored with those brokerage models that were maybe a little overvalued from a revenue perspective? I won't say overvalued, valued differently from a revenue perspective. Is that transferring over to other models, or is it just sort of retrenching from logistics altogether?
I would say I wrote an article about this 5 years ago about the type of business models you find in supply chain. And there are digital intermediaries who are attempting to automate the analog broker introduction process.
So the Convoy,
format, Convoy, Transfix, Flexport, and really that category has been the most visible and attracted the most capital, because during the days, let's say 2016, 17, and at my prior fund, I was actually an investor in Convoy. Investors were looking at top line growth only.
Right.
And
Didn't matter what the revenue looked like.
yes, the idea was you're changing the market, so you shouldn't be held to incumbent multiples, that this was going to be a different company.
Got it.
So that's not the case anymore for that category. I think investor perspective and mindset has shifted. But for the other sort of business model buckets, be it enterprise software or automation technology, it's status quo. I mean, those are high margin business models.
Mm-hmm. What about marketplaces?
I throw marketplaces into the digital intermediary. So when you're talking about, the holy grail of revenue is a 3-year contract at 90% margins where the customer pays all up front or commits to pay month to month. That's your beautiful SaaS contract.
Yeah.
Now, at the far other end of the spectrum is where you're connecting two parties.
Yeah.
And it's a commodity introduction, because on the other side, be it the ship owner, the carrier, the last mile provider, that's really the quality of the service is the asset owner. So it's sometimes a race to the bottom, and it's a very transactional form of revenue, ad hoc, very dependent on sort of the volumes and flows of your customers. And there's a constant sort of race to the bottom on take rate, because there's very few times there's exclusivity on either the asset owners or the shippers. Mm-hmm. So that would be considered sort of the least desirable form of revenue.
Okay.
And I'd throw your comment on marketplaces and digital intermediaries into that category.
Okay. Fair enough. Yeah. I mean, I have to kind of weigh these things from two different perspectives. Obviously, I've started to follow what's being invested into, but I sort of naturally gravitate toward what is, getting traction or what is being talked about from a user perspective, right? So it seems to me that, and tell me if you think I'm wrong on this, but it seems to me that there was a period where a lot of marketplaces came up, and then there was a period where people were a little skeptical of them and wondering what the value was, especially for like a large volume shipper. It seems to me now they've matured a little bit, and they're starting to find their legs, and they're starting to get a little bit of traction. And I'm generalizing here across, obviously, but do you think there's been a maturation in the marketplace model over the 5 to 6 years that we've seen investment into the logistics space?
Yeah, and my comment on different investor valuation of that category is not a comment on the quality of those companies. Right. I think they're good companies. People like working with Uber Freight. They like working with Convoy and Transfix. They like the technology that they brought to the sector. Yep. So at their core, what they've built are good companies. The question I think on every investor's mind is, how should they be valued?
Yeah, right. Yeah, interesting. This is the dichotomy that I have to kind of balance all the time. Is like there's ideas that personally excite me that don't seem to get any traction, or ones that seem to have huge interest from the investment community that I don't hear an equivalent amount, of excitement about on the user side of things.
Yeah, so. It's funny, that dynamic, and I have that conversation with companies all the time, which is you speak to incumbents, you speak to people in industry, the crazier your business model is, the more they say, not very interesting, I don't think that'll work, or that's just a new form of an old story. But when you go to investors and you say, there's a 1 in a million chance of this working, but if it does work, it's going to be huge. Yeah, that really resonates with how we invest and construct portfolios. Right. And to folks in the industry, it just makes no sense. So there's that disconnect.
Yeah, interesting. I've talked about this. We talked about this in an event a small event we did in January, where we had another investor, and I wanted the question asked during this session about like, how do the buying cycles of software in logistics match with the sort of VC? Right. Like, are they aligned well? Are they getting more aligned than maybe they were initially?
Well, a lot of investors are surprised by the sales cycle in supply chain. And actually, that's why they love brokerages so much, because you and I could launch a brokerage today and we could be selling next week.
Right.
But when it comes to the enterprise software that you'll find in maybe the TMS, the ERP, GTM, customs, warehouse software, order management, all those sort of very mission critical software categories, the sales cycle can be 12 to 18 months. So the price point for those products better be there to sort of justify that long process. And investors can be surprised by that lag and that expense. I mean, one advice I would have to anybody raising with a supply chain software business is usually raise before peak, because your revenue is going to be flat for Q4. Mm-hmm. Most investors won't understand that that is not a reflection on the success or sort of enthusiasm for your product. It's just the reality of your customer base.
Right.
So there are tricks to sort of work around it. But it's a friction point for raising capital, definitely.
Yeah. We had Santosh on earlier. He was doing a panel with Shipper about kind of how they viewed investment, and you and him are in a very small group of people, I think, who are pretty narrowly focused on this industry. How should someone who's interested in understanding more of how these companies are being funded and fueled, how should they think about like the different types of VCs that are investing in logistics? There's you on one side of the spectrum, and then Andreessen Horowitz on the other side, right?
Sure.
Like, right. So,
well, I've invested with Andreessen, so they're not that far away. But
no, in terms of the diversity of what they invest in, right? Yeah.
It's really, I mean, if you think about an investor process, and Santosh is a great investor. We've done 3 deals together. If you think about the investor process, we meet a lot of companies, during the peak months of receiving pitches, usually in the spring and winter. We're meeting with 10 to 15 companies per week. And so many times it's not a decision on which company do I like the best or all of this. It's which company can I diligence and get to that investment answer within a reasonable amount of time. I mean, if we had unlimited resources and unlimited time, I would take a hard look at everything. Mm-hmm. But the realities are that I need to make 6 to 8 investments per year, and the faster I can get to an answer, the better. Now, fortunate for me, I focus on this space. So when it comes in and it's a supply chain company, I can get to an answer faster. But for folks like Andreessen, I think the onus is on the startup. And many times the startup will blame the VC and say, oh, they don't know anything. They think we're Flexport. They think we're Convoy. But that's on you. I mean, you've gone to them to raise capital. And if you want to be successful in that, you're going to have to bridge that gap and educate them as far as what's exciting about your company, explain mm-hmm. the market, explain why it's big, and just, all usual best practices.
Is there, I mean, should a company that is looking to raise and maybe keeping its options open from like a smaller fund that is focused on this industry versus, maybe they feel like they have an in with a larger fund? Does the story change when they're talking to you versus when they're talking to a larger fund? Like, can they start off from the third paragraph with you as opposed to—
I mean, they're going to be very different pitches.
Okay.
I don't need someone to walk me through,
container
or like container shipping or anything like that. So yes, it's going to be, I think we're going to run a much faster process. But I would say it's less who you have an in with, and it's more what size fund is the right fit for your capital round. Mm-hmm. So if you're raising today, the investment buckets are really broken down into pre-seed, which is 1 million or less, seed, which is, and I know there's a gap here, but I'm going to say 2 to 5, and then Series A, which can be 5 all the way to, I mean, Leaf's Series A was 20 million. So you want to work with the fund that's a right fit for that round. Smaller funds are a better fit for a smaller round because you're going to represent a more important investment to them. They're going to put more resources and capital behind you. there isn't signaling risk where if a larger fund invests in you in an earlier stage and they don't do the next round, other investors ask why. And I think one of the important roles that I play for my companies is I provide that bridge to the generalist funds for the next round, which is where I know the language they speak and I know the story of the startup and I can connect the two. So that's a role that I frequently play for my companies. But if you're going straight at the generalist funds and you want to raise off the bat, a very large round of 5 to 10, you're going to want to invest a lot in the education, the story. I would offer up references immediately. I'd be proactive in saying, hey, would you like to speak to customer A? I would prepare ahead of time a data room with research on your market and help them build that bottoms up market sizing.
Yeah.
So it can be done, just takes a little bit more work.
Yeah. So one more like inside baseball kind of thing with VC, because I think a lot of people who are dialing in have heard about VC a lot, but may not kind of understand the particulars of it. We've talked a bit about kind of, as I'm trying to understand growth of particular companies, the importance of like a new lead investor on each subsequent round, what that typically means, what that signals to the market. Can you talk a little bit about like, is it good if there's a new lead investor on each round, or is it better if one fund is kind of the lead investor on subsequent rounds?
It's nuanced. I mean, there are funds, I think Benchmark, Founders Fund, Sequoia have taken the approach sometimes, well, they'll lead the seed, Series A, Series B, all the way to pre-IPO. There's risk there, and if they don't follow on, that no one else will invest because the high conviction investor has backed out.
Yep.
Generally speaking, if I would say if you had to pick, you want a new lead investor who's just comes from a different and larger fund each round.
Yep.
So that signals to the market, hey, we're raising a Series B, it's 50 million. We're bringing in Insight leads Series B rounds. So they see all the best of the Series B and they're picking us. So it's sort of a high qualification of the round to bring in an independent new expert in that asset class.
Got it. Okay. So I think that's important for people who aren't super familiar with this to understand. And we're obviously talking in generalities. So there's different outcomes.
Yeah. If you have a term sheet from Sequoia, take the term sheet from Sequoia.
Yeah, exactly. Do you get to interact much with shippers and forwarders and other users of products, and how does that sort of influence the thinking you have, not just like in terms of specific companies, but general thesis thesis around what you want?
When I started working in the sector or investing in the sector and competing with the larger funds, I knew, I had to invest heavily in BD and building the network. So, the buck stops with the shippers, and I work very closely with trade consortiums like RELA, the folks at NRF, and then the newer groups like the Lead in New York, who represent those shippers. And with those groups, I help connect them with startups and organize events. And what I get out of it is being able to take the pulse of their needs and what they're looking for from a technology front. So one great example is when the trade war when the rumblings first started, a lot of the retailers were pre-ordering inventory, and this was way before the coronavirus, beginning efforts to diversify their supply chain and procurement upstream, because they said, well, even if this is resolved, this is not going to be the last time, and we need to diversify this risk. So I started looking for a global trade management platform. Fortunately, last fall, I was able to back Rob Garrison's new company, Mercado, which is obviously global trade management. And that investment thesis was born probably 2 years ago, I think, at a RELA Distribution Center Committee meeting or Senior Supply Chain Leaders Council in Gallatin, Tennessee.
Mm.
So yeah, I get a ton out of it. Retailers and shippers are notoriously difficult buyers of technology.
Yep.
These are the folks who flip their name tags around at conferences. So
Yep.
knowing what they're looking for, I think is very important to an investor.
Right. Yeah. Yeah, we believe so too. As I told Santosh and Audrey earlier, we're trying to help create that more of that virtuous loop with our events and stuff. So, so you mentioned coronavirus. I feel like I have to ask, given the reason we're not having this conversation on a stage right at this moment is because of the coronavirus. So, I know it's really early. What impact might that have on appetite, investor appetite? Have you thought at all about what impact it might have on what companies get invested in, what models or what types of companies?
Yeah.
Aside from
Well,
everything to healthcare and
clean it.
mass production.
Yeah, we're public equities, Purell only. Well, something I saw during the last recession was e-commerce is an unceasing charge. That percentage of online consumer buying just will increase and increase and increase. So, and e-commerce is driven by technology, and e-com DC is 2 to 3 times as expensive as an analog ship-to-store DC. Order management systems, highly complicated, et cetera. So it doesn't diminish my appetite for and enthusiasm for investing into supply chain technology. I do need to be aware of the later sources of capital, and there are venture funds who will hit pause this week and wait and see, especially on the later side, where the public markets do play a role in their investing strategy, where their investments may look at that exit or channel 2-3 years away. So the events today may play a role. So there are funds who are going to be pressing pause. Fortunately, I'm not raising Fund 2 until next year, so I'll have more information there. But I've heard limited partners are pulling back as well, waiting to see not just how the economy sort of works itself out, but are there other asset classes that emerge as better choices than private capital? So it hasn't slowed me down. We're doing a term sheet this week, but definitely keeping an eye on it.
Yeah, and not that necessarily Twitter is the arbiter to gauge anything at all by, except for bad, snarky jokes. But I have been seeing a ton of kind of guidance from VCs in general saying if you want to raise, now would be a good, if you were thinking of raising anyway, now would be a really good time to think about finalizing those. So, but
yeah, I mean, a lot of it is, it's 98% self-serving.
Yes, of course.
They said the same thing when there was the SaaS repricing event. They said the same thing at the dip 2 years ago. There was that famous article, "The Good Times Are Over," about 8 years ago. So, I mean, you got to take it with a lot of salt.
Out of the equity markets, all that stuff.
Yeah.
Anything else you wanted to mention that I haven't brought up?
Yeah, well, hopefully, fingers crossed, Modex, the event in Atlanta, still happens next week. Schematic with Prologis Ventures, Honeywell, and SPT Robotics throw the largest warehouse technology event for startups throughout the year. It's called the Modex Big Bash. So if Modex does happen and you are in Atlanta, please join us. The Modex Big Bash is modexbigbash.splashthat.com. Sign up. Love to see you there. Or you can find the link on my LinkedIn.
Cool. Yeah, and a good way to reach you is through LinkedIn and Schematic, and your website, I mean?
Yeah, I'm responsive on both.
Cool. Awesome. Well, Julian, always great to chat. Hopefully this was really
informative
for people, and look forward to seeing you again. Thanks for the flexibility. I know we were supposed to be having a beer soon in Long Beach, but we'll have to wait. So.
Virtual.
That's right. Yeah. I'll go crack one open right now. Thanks again, Julian.
Thanks, guys.